Good afternoon. This is Tony Cherniawski with the Practical Investor LLC. Today is November the 18th, 2008. And the topic for the day is Riding the Rogue Wave, Part 2. Part 2? Did you get knocked off? There's a lot of people that did, by the way. Don't feel bad. I got word that one of the top traders on Wall Street got stopped out. So, you're in good company, and I just want to give you a progress report on what's going on here to give you some reassurances and some ideas about what we might see next. So let's go directly to the Standard & Poor's, and we'll describe what's happened so far and what the potentials are going forward. Looking at the Standard & Poor's, we see a straight-up rally on Thursday, ending at 913 on the Standard & Poor's, and then a double zigzag down. Now, people will argue with me. They'll say, wait a minute, that looks like an ABC up to Friday. That could be, but let's take a look at an alternative index for a minute, the NASDAQ 100. And we can see here clearly this is a double zigzag down. Remember, you've got zigzags, which are simple, and double zigzags, which are complex. I said this in the earlier video. This program, this move is going to be complex, and we certainly have enough of it already. So going back to the Standard & Poor's, we're seeing here a double zigzag. This is a correction of the first wave up, and now we're going into the final thrust from here to higher highs. Now let's talk about where this can go. Okay, one of the things that I'd mentioned is that there are no Fibonacci relationships in an expanding triangle. Oops, I goofed. There is one. Usually it's in the wave E, which is where we're at right now. So let's talk about three potential Fibonacci's here. The first potential is at 920. If you look closely at the chart, you'll see the red line going right across at 920. That is a resistance level that, if we can overcome that, becomes support for further rallies. So 920 is our first area. I would say that there's a very good chance that we'll get over it. But let's just suffice it to say that's Fibonacci number one. Fibonacci number two is at 950. Now, if you look a little bit to the left of the chart, you'll see the last peak at 953. Very interesting. So this could get a little people's interest if we can go to 950 or even higher here once we get above that first level of resistance, hopefully to become support. The third area is at 1030. Yes, sir, right up to the top of this triangle. 1030 is the third Fibonacci relationship, and it's a very distinct possibility, although we will probably have to rally into Friday to get that. So one of the caveats is we don't know how long this rally is going to last, and so I don't expect to see this to necessarily go all the way to the top. I suspect that we could go to 920, very high probability there. 950 is also a good probability. 1030, who knows what the probability is. Let's give it a 50% right now. Now, what are the reasons why this rally needs to happen? There's a fundamental reason which a lot of people tend to overlook every month, and that is options expiration week. If you look at the Standard & Poor's options chain, you'll see some very interesting developments here. First of all, there's a lot of put options down where we are right now. A huge number. In fact, I haven't even calculated the liability, but it is monstrous to say the least. We're talking about hundreds of billions of dollars. So there's a high probability that this market needs to be rallied up just to relieve the option sellers, i.e. the big guys on Wall Street, from the liability of having to pay those hundreds of billion dollars of claims that would occur if the puts were in the money as of options expiration. By the way, options expiration is 3 o'clock on Thursday for the Standard & Poor's index options. Having said that, this gives us a good reason to see the market rally through Thursday at the very least. But the interesting thing, let's imagine that we go over 950. What could make this rally even stronger and longer is the fact, the recognition, as it were, that this market might have put in a bottom. In fact, we already will hear it, and I'm sure you're going to hear the drumbeat accelerating tomorrow, especially as the rally goes up you'll see a fevered pitch excitement by all the pundits on talk television and talk radio talking about this pattern being fulfilled, and that the bear market is done. We now have a bottom that's in, and we're going to new highs for quite some time to come. That couldn't be further from the truth. What this pattern is telling us is that there's a limit both in time and space where this thing can go. So I've given you 3 different probabilities. The first one is virtually 100%, 920. 950, I would say we have a good probability of that happening. 1030, it's a toss-up. Having given you all that, this is probably the last video on the rogue wave. I don't think that there's much more to say until it finally finishes. What I will say, though, is that if any of you have questions, you can reach me at tonyc@thepracticalinvestor.com. In no way do I intend this video to be any kind of solicitation to buy or sell any financial product whatsoever, and the SEC also says that we should tell our clients that you cannot invest directly in an index. So having said that, I hope you all have a great week. I hope things do well for you, and in the meantime, please do the right thing. It's been fun talking to you.